growth, what do you say? But we also want to see you grow financially and economically. Amen? And for that reason, we have with us one who is a daughter of the soil, a daughter of East Jamaica Conference. As a matter of fact, she worships at the Whitehall SDA Church. And how privileged we are to have one who serves at the Jamaica Stock Exchange at a time when the stock exchange was ranked #1 in the world. What do you say? Amen. And they continue to do a good work. But we are so happy that she is here to share that with us, what she has been doing, so that all of us can benefit and become better stewards and be better off financially to carry out the work which we have been mandated. And so to present to us today on the topic stock market and small business is none other than our very own Mistress Marlene Street Forrest. Please help me make her welcome as she comes in the capacity as Managing Director of the Stock Exchange.
I'm very happy to see you and to be able to present to you on the stock market. Usually before I begin, I want to get a feel from the audience as to the persons who know anything about the stock market, those who are in business or just main investors. So can I see the hands of those who currently invest in the stock market? One, two persons, a few. Can I see the hands of those who are business persons in the audience? One or two. Okay, so therefore what I will do is, while I'm supposed to be speaking to you about raising capital through the stock market and small businesses, I think I want to just go from the beginning. That might be a better thing to do. So we're talking about what is a stock market. Probably I go there first. And the role that the stock market plays in the development of Jamaica or a country. And then I can probably go on to a little about the small businesses, how you raise funds. But the stock market, simply put, is a market. And if we remember that, then we remember everything. It is a market. And so let us just look at it from the standpoint of a supermarket. You have shelves in the supermarket, and you have goods on the supermarket shelves, and you can pick from that what you want. But the person who operates the supermarket really is just the facilitator, right? And so with the stock market, the stock exchange is the facilitator, right? It is there. And let us consider, therefore, that the companies, we have what is called companies that are listed, and I will tell you about that on the market. Those are the goods, right? And then what we do is, if you operate a market, if you operate the supermarket, then you must ensure that good order prevails, right? There are some rules towards operating that supermarket. You can't just go there and pick up the thing and come out. If you are going to put these things on your shelves, there must be some standards, right? There must be labels on the thing. You must have what time for expiration, etc. Same way with the stock exchange. We provide that service so that we say, if companies come to want to get your money to raise capital, that's what it is called, then the companies must have a certain standard. And the stock market is there to ensure that these companies have a certain standard, a label about them. Yes? And to continue to ensure that while the goods are in that supermarket, it continues to be fresh. And if the expiration date comes, because there's a date, and liken it to the stock market, if the expiration will come, if the companies fail to do what they are supposed to do, it's taken out. It's the same thing we do. So we are regulated by what is called the Financial Services Commission. And what that means is that there are some rules to operating within a market by companies. The companies must present you with some accounts so you know what the product is. The companies must also present you with your financial statements so that you know their profitability. And the companies must disclose to you on an ongoing basis what is happening. Those are some of the things that happen. And so the stock market is there, or the stock exchange, to ensure that the companies do just that. And what I'm trying to do is to get to you the confidence that you must have in the stock market. Because without confidence, you're not going to invest. Now, the rules that are available, or we have requirements, we have certain requirements, and as I say, the companies must stay within those requirements. But if you invest in a company, the stock market also allows you not only to invest at the first time, because you're hearing now of initial public offerings, right? Forrest, I'm happy to say, everybody knows about Forrest. It's one of our own, and they have just raised funds from you and me, well, not necessarily me, but raised funds. And I give that caveat because as the head of the stock market, it is not, we cannot generally buy stocks. Yes, we can buy at the beginning if there's an IPO, but not after. So you have raised funds. Yes, he has gone out. Let us use Forrest. He wanted capital in his business. He wants to grow his business, right? And so I'm going to stay on to Forrest because we are all familiar with that one, and I know Brother Foster is not going to mind if I use him as the example today. And he has a business, and he wants to expand that business, grow that business, go into different areas, and he says, I need some money, right? And I need the money from the people who are in Jamaica or elsewhere, because if I get this money, I can expand. And what the stock market does is provide that vehicle that when he gets the money from me and you, then, and we do what is called a listing, then he as the owner will use this money to grow. You as the investor will get a return on what is called your investment. And at the stock exchange, we'll ensure that he complies with the rules of the game. So good so far? Yes. And so initially, you invested in Forrest. But then after you looked at how he's performing, you might decide, and I think he's going to be performing very well, you might decide that you want some more stocks, right? So what we provide is a facility for trading of those stocks. So it goes from your hands to the other hand. And we have what is called a trading platform. And I'm going to bring in the next person now, which is called the broker. if you want to trade those stocks, you're going to have to go to a broker. And the broker, you will tell the broker, I want to buy more or sell more. Now the stock exchange also regulate those brokers. And on a daily basis, what the stock exchange does is provide what we call the platform to allow for the trading in secondary market. And what was the primary market in the first place? Was when you had that initial public offering. That's primary. You went in at that point when the owner wanted money. And then the secondary market is where you trade on whenever you want to buy more or sell the stocks. And so on a daily basis, well, market has closed now because the market closed at 1. And so on a daily basis, what we do after the trading, we will provide you with information on how those trades take place. And then when you look, listen to the radio or the television, you will hear that the stock went up or it went down. So let us pause on that. And so when a stock goes up or down, it's really the price going up or down. It doesn't mean at that point that you have lost your money, right? Because stocks trade up or down on a daily basis. And it all depends on the bid, what is called a bid or offer. And sometimes a person might want to come out or sell their stock quickly, and they might ask for a lower price. So it does not necessarily mean that any penny the sky is falling down and the stock is doing badly, right? But again, it is important that when you invest, you watch your investments. So we have what is called a report at the end of the day that shows you how your stock performs. It is important also, because I'm telling you about the high and the low, that as a shareholder, because when you bought into Forrest, you become a shareholder. And what does it mean to become a shareholder? You're going to take the good and the bad. It means that you could go in, and if a company is not doing well, it is your company. So if your company is not doing well, simply put, it's your company. And if your company is not doing well, then you are not going to be getting a good return. But if your company is doing well, you will get a good return. And the return comes in various forms. So if your company is doing well over time, and you bought Forrest at $2, that's what it was sold at, $2 for the price of the share, you might find that if that company is doing well, it goes up to $2.50, $3.50, based on how the company expands, right? Am I correct? Yeah. Right. And so that increase in the price of the stock is called capital appreciation. You don't pay any tax on that if you should sell your stock. So if you bought it at $2 and you sold it at $4, it's 100% increase, and that $2 you pay no tax on. Unlike many other investments, where if you had put even a saving, you would have paid some tax on that, what is called withholding tax. With this, you pay no tax. But there's another way that you get money from being a shareholder, and it is through dividend. So the company would determine at a particular point in time that they want to pay you some of what the profit of the company, and so that is also called a dividend. But as I said before, that you could invest $2 and the company probably is not doing well and it goes to $1.50. That's a difference or a margin that at that point in time, if you tried to sell that stock, you would have lost $50. What it means, therefore, is as a person's encouraging the investment in companies, we say what you must do is what is called diversify your portfolio. Meaning that you don't put, it's a simple thing. You don't put your eggs in one basket, because some will go up, some will go down. But the fact is that if you invest in equities, which is what we call investing shares, over the long run, it outperforms any other form of investments. What did I say? Over the long run, and stocks are over the long run. If you have a company, it's over the long run. You don't operate a company for 1 year, right? You look at it over a long period. It's the same way in operating with stocks. You buy it for the long run. And what we have found is that, especially in Jamaica, and I think it is important as Adventists for me to tell you this, that you should not really be putting your money only in saving account. Why is that? Saving account is not investment, that's one. But two, you need to put your money to create wealth in investment that outperform what we call inflation. Correct? You're understanding that? So if the inflation rate is 6% and you get 1% from the bank, how well are you doing? You are doing poorly. Exactly. So you have to look at take baby steps. If you have never invested, you take baby steps, where you take some from that saving account and look at the market and see what the market is doing. What we have seen in terms of market performance, even for this year, our stock market year over year has performed over 45%, just for year over year. Probably I'll pause and ask, which other investment has performed as well? None. The treasury bill at this point, because you know you can buy treasury bill, it's about on an average 4%. Other government securities on average again 4 to 7%. So there's no other form of investment in the market that will compare to what you can, and you notice I say can, I didn't say must, get if you were investing in the stock market. It is not a sin to invest in the stock market. I want to tell you that too, because when you are investing in companies. It's not a gamble, and we don't expect that it should be a gamble. A gamble is when you throw that dart and you say that horse might run. What we are saying is you are investing in the real economy. You are investing in companies. And it is also not a gamble, because we are expecting that you are going to be looking on those companies' financial statements and make wise decisions. Right? You are investing in a Grace Kennedy, you are investing in a Forrest, you are investing in Honeybun, all of those companies that have to be regulated, and they are regulated by the Stock Exchange and by extension the Financial Services Commission. We are sort of out of time, but I also want to turn my attention to the persons who are business persons in the audience, and to say that it's very important in doing business to ensure that you are properly financed, that you look at your options in financing. You have a loan option, that is where you go to the bank and you borrow, or you have an equity option where you invite shareholders into your business. We always encourage persons to look at the inviting shareholders in your business, because that is what we call patient capital. When you borrow a loan, what is required. Interest, and don't it you pay back immediately? You have to pay on a monthly basis. There is a condition for payment, and that interest, if you don't pay, then there are some severe actions. We like to say that the banker gives you the umbrella when it's sunny, and he takes it back when it's raining. So we have to look at how we capitalize our business. And what we have found is that the companies that have come to market have grown exponentially, having taken that plunge. The junior market is a market for small businesses. It's important for me to leave with you the importance of that. One, the importance of, as Adventists, if we are Adventist business people, we need to start to get our books and records in a good order. Because we have found that one of the drawbacks in terms of people coming to get capital is that, or get financing, is that the books and records are not done properly or done at all. So we, just as though we are stewards in other areas, we must be good stewards in our business to ensure that they are the information is properly recorded and can stand up to scrutiny. Having done that, and you decide, like Forrest, to raise funds from the market, then a good place to do so is via the junior market. Why is that so? Apart from the fact that it gives you the discipline that is needed in business. You have to report. You have to prepare those information for the market. You have shareholders to answer to. One of the other things is that if you are a company listed on the junior market, you pay no corporate tax for 10 years. And that's good. The government has seen it fit to say these companies must grow because you have now put yourself in the spotlight by accessing capital, and the government says, look, on account of that, for the first 5 years, you pay no income, no corporate tax. And for the next 5 years, you pay 50% of the prevailing rate. And that's an incentive to allow and incentivize you to grow your business. And I know I'm out of time, so this is where I'm going to stop and allow for questions if anybody has any questions to ask. Thank you.
Would you believe that in Matthew chapter 25, relating to the parable of the talents, verse 27 says, "Thou oughtest therefore to have put my money to the exchangers, and then at my coming I should have received mine own with usury." What an encouragement. A support for business, a support for the stock exchange, and when we have our own to guide us, how well we would benefit from the information. Is there any question at this time? There is. Do you have a mic? Is there another
exchange? And you also said that one way, there are rules and regulations that governs the stock exchange. Are you protected from fraudulent behavior on the stock exchange through the brokers?
Yes, let me answer it this way.
I asked it in the light of people who sell properties for individuals and refuse to turn over their money over to the people to the owners.
Okay.
Yes.
And that's a very good question. Now, when I said to, I encourage you to start with the junior stock market, I was talking really more to the business people who want to list their company, not necessarily investors. Investors can invest in any of the markets. We have the main market, we have the junior market, we have the USD market, we have the bond market. So all of those companies that are listed on any of those markets, they are there for investors to invest in. However, in answer directly to the question about fraud and protection, what we have in the stock market is, and I'm talking about the utility now when I'm answering, is the trading platform and the settlement platform. Now, the settlement platform is what we call our subsidiary, the JCSD, Jamaica Central Securities Depository. You cannot, whilst you have purchased your stocks, those are housed electronically under your account in the JCSD. You cannot, as a broker, if you went to the broker and asked the broker to sell your stocks, then there is what is called settlement. As of Monday, it is T plus 2, which is trading date plus 2 days. Now, the investor we must have settlement from the brokers. But apart from having settlement, must have settlement from the brokers, the JCSD stands as the central counterparty to all transactions. What it means is that as an investor, you must get paid. Must. Underline 10 times. Not only that, apart from having that system in place, we have what is called a compensation fund. So if there is any fraud, defalcation, anything like that, loss of your assets, which we don't have, then there is that fund that we call on for the if the brokers were to do anything crazy, right? So you are double, triple protected. Yes?
Very excellent information.
Hello, Brother Forrest.
Yes, my sis. Whereas collateral is required to obtain a loan, what is required to obtain equity?
I didn't hear that.
Whereas collateral is required to obtain a loan,
yes,
what is required to obtain equity?
Equity.
Yes.
Okay, so I'm not going to go into a long process. So the person who wants to get equity, we are talking now on the business side. So there are certain things that a company must do, and it is then to raise capital. The company must offer its shares to the market. And this is done, I'm not going to go through all the various aspects, but I'll go to the one most popular. That is done through what is called an initial public offer. What does that mean? The company must present what is known as a document called a prospectus. And in that prospectus, it tells you about the company. It tells you about the company's management. It tells you about the board of directors. It tells you about a company's audit committee, and a company's compensation committee. These are committees that I'm talking about that are compulsory. And then when the company has finished that document, which is actually a legal document, the company must register that prospectus with the Companies Office of Jamaica. When it does that, it must also register that document with the Financial Services Commission, who gives a no objection letter. That document also comes to the stock exchange for review. After you have done all of that, then you now are ready. And when I say all of that, obviously within that prospectus too, a critical area tells about the business plan, the projections, etc. Those sort of financial information. The company, if the company is new, it is going to be projected information, financial information. If the company is not, and say the company is around over 5 years, the company must have audited, and this is why I said make sure your information is, you are taking care of that side, the financial side. 5 years audited financial statements. Now, after the company, that document is done and approved and no objection letter, it goes on to the stock exchange, where it is put on our website, placed on our website, and then it gives a particular time for the offer to be open. You say how much you want to raise and at what point, at what price. And then after 7 days, the offer will be open to the public, and then the public participate or not participate. If it is the public participates and is successful, then the stock exchange lists, it's what is called list that company, meaning that that company can transact, or business read that company can be transacted on the market on a secondary basis. Have I answered your question, Mr. Forrest? Yes?
Thank you very much for your questions. Since we have time constraints, we can only take, all right, 3, no more. And please make the questions short and to the point.
Beautiful presentation.
Thank you.
I have learned. The question is, what is the difference between the stock market and the bond?
Okay. So there is stocks and there are bonds. Now, stocks are a part, you are part owner of the business, so you get a share of the business. And that is what we call ownership, permanent ownership in the business. Correct? You're a permanent owner, you're a shareholder. However, where it is that it's a bond, it's loan capital. So you have loaned the business X amount for a particular period of time and at a particular terms of engagement. So you might be 5 years at 5%, and that's your bonds, right? So one is not permanent owner, the other is lending the company money, while the other is you have an ownership stake in the company.
Okay, thanks so much for your presentation. This is a two-part question. What word would you give to someone who has the view that the stock market is speculative? And that's the first part. And the second part, for someone who is not of the view that it isn't necessarily speculation, but wants to be assured that he's making a good investment, what 3 to 5 points would you give that be guides for a person to assure a person that to select a good company on the stock market for investing in?
Okay, so the first question is what about speculation? Now, as I said earlier in my presentation, speculation is where you don't have sufficient information to go by and you are thinking without fundamentals that this thing can happen. The other definition of speculation is also where you are not going in as a serious investor, but you are going in, coming out, going in, coming out. That is something that we we discourage in respect to investing, because there's a difference between investing and speculating. When you invest, you go in for the long haul. Not to say that you are not going to take your profits off at some point. You have to do that. But speculation is more where you are going in for the quick money. You don't care about the fundamentals of the business, and you go in and come out. Now, the other part of the question is, what are some of the things that you look for in terms of investing in a business? And one of the major things that you look for is usually the team. You tend to buy the team. So you buy, I don't want to call anybody's name, but you buy, say, Don Webby. You look at the people, you look at the integrity of the people, and you buy that company based on the management and the board. That's one. The other thing is, you look at the possibility that the future value or the future possibility of that company. Food, I'm going to give an example. Food always sells, right? There are some other examples that I could give that always do well, but I won't here. But food always sells. And you look at that possibility, and you look to see whether there is some continuity of that business. Does the business have a future? The other thing is, again, you look at the company's return on investment, ROI. You do those statistical things, ROI, ROE, things like that. You return on equity, return on investment. You look at those areas, and you look on the company's profitability. So these are some of the things that you look for in investing in a business. You look how outward looking the company will be. The company will tell you about its future plans, and you look at the company's governance. So these are some things that you look for in terms of investing in a business.
Okay, good evening. In terms of, I want to look in the area of stocks and bonds, right? You said that earlier, and you stated that in stocks, that is what you have owned, it's something that you own, and the bond is something that a person lend to the company, right?
That's correct.
All right, for the bond, right? Does that person get back something in lending it to the company?
Yes.
Do they get back an interest?
Okay, now let me state about the bonds and again about the stock. Now, if the company is the bond usually says, for example, it is you are going to be lending the company $10,000 over a period of let us say 10,000 over a period of 1 year or 2 years at an interest rate of 5%. Some of them are variable, but for the use of this example, let us give it to you as a simple form. So 5%. So the investor knows what he's going to get. One, he's going to get 5% over 1 year. Two, he knows that he is also going to be paid back what is called his principal, the amount that he invested. So you are going to get back your principal, you're going to get back your interest. But let us go a little further. That the bondholder, the first call on the business, if the business is going belly up, if the business is not doing well, the first call on that, on the residue of that company goes usually to the bondholder. The bondholder, though, does not have voting rights in a company. The shareholder does, because the shareholder is a owner. If the business is going bad, the shareholder is not going to, the shareholder will lose, will not get back the amount that he invested. But the bondholder is most likely to get back what he invested. So one is a safer investment, especially if you are not as risk taker. You might want to go into having a bond, or what we call at the stock exchange we have what is called preference shares. You know what you're getting, you know what you're investing in, and you know what you're getting back. While as an owner, all the risks are yours. You take all the risk, and you take, because of that, there is premium to if the company makes money, you get the risk and the reward is equal. You know, the higher the risk, the higher the reward.
Okay,
the lower the risk, the lower the reward.
So that means if you're a shareholder, because it's more than one of you, then the risk is less.
But if they are a shareholder, the term borrowing doesn't come into it at all, because you are part owner. So you own the company and you have put your money in the company.
But
so you don't borrow anything.
Okay then.
Yeah. You don't lend the company anything, but with the bond, you lend the company.
Okay.
Yeah?
So the risk is greater in that sense, because it's
on which one?
for the bond, not
No.
the shareholder.
For the shareholder, yes.
Okay. Another thing, what is it that makes the stock market crash or goes down when one has invested in a company? Because when you invest in the market, right? The money that you have invested in the company goes on the stock exchange, is that correct?
No, the money that you invest in the company goes to the company.
Goes to the company,
Yeah,
but
definitely not to the stock exchange.
But all right, so it goes into the company, but are they invested in more than one company?
You can invest.
The market then.
Okay.
The market that they are investing in.
All right. As an investor, as I said, you look at the supermarket and you see all those things, right? So for the market, you see all these various companies. Alasco, Honeybun, D&G, all of those. And as an investor, say you have money, you can put your money in any of those companies. You could put it in one, and you could put it in more than one. So you would be an investor in any of those companies, or in other words, a shareholder. You own part of those companies.
So what allows the market to crash then when you have invested in it?
Okay. So the market is determined by various factors. The market is determined, one, by external factors. If the economy is not doing well, the market usually does not do well either, because the market reflects what the economy is. So let us say, for example, 2008, when we had the global meltdown, if it is that persons are not buying the products of the companies that are listed on the exchange, and the market turns down such that these companies are not doing well. Let me just give that example. What it would mean is that the price of the stock would go up or down. It would go down. And if many of those companies are suffering the same fate, what would happen? The market would crash. Correct? So that is why you will hear about a market crashing, because in a depression, and the companies are not doing well, the price of the stock is going to go down because the company is not making a profit, etc. And if the price of the stocks are going down, then the market is going to
go down,
crash.
Yeah.
Yes, because the crash means it goes so down that the entire, I don't want to go into that, but the entire value of the market is now very low as against high.
And you are the person that is investing, you're getting less returns.
Oh yes, if you invest,
Yes.
you're a shareholder.
Yes,
You'd
but
get
your
less
return would be so much as you would be expecting.
That's right.
Okay then. I just want the final thing and I'm finished. The finish? Okay. I wanted to relate it in the sense of a company in terms of when we work together. That is the same thing happens if we don't work together. You understand? As shareholder, if you decide, if you are the principal person in a business or a company, if you decide to do things on your own, then that is what is going to happen. You're going to crash. But if you decide to work together in the different areas, then you come together and it will be successful.
Right.
Thank you.
And even in a company, even if you're a shareholder of a little value, you can still work with that company, because when you have your annual general meetings, you will go and give your opinion as to how the company is performing.
Okay.
Thank you very much. I appreciate the fact that you have been engaged, you have asked some serious questions, and we were able to respond adequately, and I am quite pleased. I'm sure you will, Sister Street Forrest, please join me. I'm sure you would agree with me that on the spot she modified her presentation and masterfully pitched it where we could get every drip of it. And we are indeed pleased. Our eyes have been opened, our options have been widened, and surely we will go forward as better stewards of our resources so that we will be able together to fund the mission. Mrs. Street Forrest, for a job well done. We appreciate what you have shared with us today. And as a token of our appreciation, Mr. President, please help me.
When you say thanks and the person goes, there's nothing to show that they were at a particular place at a particular time. And we have decided that those who have done presentation for us 2017 will receive something that they can have to show that we really demonstrated our appreciation. Sister Forrest, we are happy for what you have done, and we are proud of you. We own you as a part of the Seventh-day Adventist Church, and we take pleasure in presenting to you this trophy, this token of our appreciation, and may God bless you. They asked us, and we decided that empowerment is what we're